You're busy, right. And the world, it just keeps moving faster. You want to get a handle on what's really driving things globally, but without drowning in, endless reports. That's pretty much what we do here at the Deep Dive. We sift through all the crucial info, pull out the key insights. It's your shortcut to being, well, seriously well-informed.
Exactly. We're trying to cut through all that complexity, bring you what actually matters. And today we're diving into the two sort of dominant forces shaping international trade right now in 2025.
Okay, so what are these two big trends we're tackling today?
Well, first, we're looking at this powerful comeback, you could say, of global trade and tariffs.
Yeah.
And
Okay.
second, the increasingly vital role of sustainable trade in ESG. That's environmental, social, and governance stuff.
Right, ESG. So tariffs making a comeback and this big push for sustainability, it really does sound like we're at some kind of crossroads for global business.
I think we are. These two areas, they're fundamentally reshaping things, not just economies and, those complex global supply chains we rely on, but also the very relationships between countries.
All right, let's unpack this then. Our mission today is to really get under the skin of these two trends. We want to understand what's driving them, what the real world impacts are, and maybe even get a sense of where things are headed. Ready to jump in.
Absolutely. Let's start with that first big piece, the renewed focus on global trade and specifically tariffs, which are playing a much bigger role.
Tariffs. Yeah, they feel like they're always in the news lately.
Yeah.
Just quickly, for anyone needing a refresher, what exactly is a tariff?
Sure. So in simple terms, a tariff is just a tax a country puts on goods coming in from another country. But what's really striking, in 2025 is just how deliberately they're being used now as tools, really, for economic policy, for protecting domestic industries, it's protectionism, and even as a lever in, well, geopolitical bargaining.
Geopolitical leverage. Okay, that definitely sounds like more than just economics. So what specific things are we seeing with tariffs this year, 2025?
Well, the big headline is a definite increase in protectionist policies globally, and the U.S. is really taking a lead role here. To give you some hard numbers, the U.S. has slapped a combined tariff rate of, get this, 104% on a bunch of goods from China. And that includes a hefty 20% tax on a really wide range of products.
Wow, over 100%. That's a massive extra cost. How's China reacting to that?
Predictably, yeah, they've hit back. China's put retaliatory tariffs of up to 34% on pretty much all goods coming from the U.S., and they've specifically targeted key areas, too, like a 15% tariff on American coal and LNG, that's liquefied natural gas, and 10% on U.S. crude oil.
Okay, so it's a real tit for tat. It's hard not to worry about this blowing up into a, full-scale trade war. Is that a serious concern for economists?
Oh, absolutely. These rising tariffs have definitely fueled fears of a wider trade war. And maybe even more worrying is the threat this poses to the whole system of economic alliances we've had since World War II. That whole global economic order feels a bit shaky right now.
That does paint a pretty sobering picture. Are there any hard numbers showing the impact? What are the forecasts saying?
Yes, there are. The World Trade Organization, the WTO, they're actually projecting a slight dip, 0.2%, in the total volume of global merchandise trade for 2025. But what's really stark is their forecast for North America. They're expecting a sharp drop in exports, 12.6%.
12.6% drop in North American exports. Wow, that's a really big contraction. And didn't the WTO suggest it could get even worse?
They did, yeah. They warned that if these back-and-forth tariffs keep climbing and if all the uncertainty around trade policy really starts to bite, we could see a much bigger downturn, potentially a 1.5% fall in global merchandise trade. And a drop like that would hit the least developed countries hardest, the ones that really depend on their exports.
Okay, so tariffs up, trade volume potentially down, real risk of things worsening. What are the sort of root causes behind this focus on tariffs and these trade tensions?
Well, there are several things feeding into it, and they're kind of linked. First, you've got ongoing geopolitical rivalries, especially, the big one between the U.S. and China. Both are using tariffs pretty strategically, trying to gain an economic edge and protect their own industries.
So it's partly about global power plays and economic security? Makes sense.
Exactly. Then you have this resurgence of protectionist thinking, protectionist policies, the whole America First idea from the U.S. administration, especially under President Trump, really pushed boosting domestic manufacturing and relying less on foreign imports. Tariffs are a key way to try and do that.
Right. I see how that fits. What else is feeding into this?
Well, we also can't ignore the huge disruptions we saw in global supply chains, right? The ongoing geopolitical stuff, plus the shakeup after the pandemic, has made a lot of countries and companies rethink their global networks. So there's this move towards nearshoring, making things closer to home, and even reshoring, bringing production right back. It's all about wanting more resilient, less vulnerable supply lines.
And you mentioned economic pressures before. How does inflation and things like that fit in?
Yeah, definitely. The current economic backdrop, stubborn inflation, volatile energy markets, slowdowns in growth,
Hmm.
it puts pressure on governments. And in that kind of climate, some are turning to tariffs to try and shield their local economies, protect jobs from foreign competition.
Right. So it's this mix of global competition, protecting home industries, fixing supply chain weaknesses, and just dealing with current economic headaches. Okay, so what are the actual consequences we're seeing from this rise in tariffs? How is it hitting the real world?
Well, the effects are pretty widespread for regular people, consumers, and for businesses that rely on those global supply chains. The first thing is higher costs. Tariffs just make imported stuff more expensive.
Right, which means either we pay more at the checkout or businesses have to squeeze their margins.
Exactly. And like the WTO warned, these higher costs can lead to that overall shrinking of global trade, which, as we said, hits export-reliant economies particularly hard. We're also seeing a big shuffle in supply chains. Companies are actively trying to dodge these tariff risks. So that means finding materials closer by, maybe producing more domestically to avoid those import taxes.
So companies are really changing how and where they make things because of these tariffs.
That's a major response, yes. But beyond the pure economics, you also have to think about the strain on international relations. These tariff fights, they risk damaging, maybe even breaking, those long-standing trade alliances that have basically underpinned the global economy since WWII. It injects a lot of instability.
And you mentioned developing nations being hit hard. Can you expand on why they're so vulnerable?
Yeah, the least developed countries often depend heavily on exporting just a few types of products. So when global demand drops because trade shrinks, or when new tariff barriers pop up, it can really slam their economies and their development hopes.
Okay. So looking ahead now, 2025 and beyond, what's the outlook? Is this tariff tension the new normal, or could things change?
Well, a lot hinges on diplomacy, really, and the policy choices governments make. There's definitely talk and maybe some hope for what you might call a tariff pause, a cooling off of tensions that could help stop trade shrinking further.
A pause would probably be welcomed by many.
No doubt.
No.
But, we have to be realistic. The risks are still there. We could see tariffs slapped on even more goods, hitting more countries. And just the ongoing uncertainty about trade policy can be enough to dampen trade and investment. The WTO is really pushing for a return to a sort of rules-based multilateral system to bring back some stability.
And how are businesses coping with all this unpredictability?
We're seeing a clear trend. Companies are investing heavily in making their supply chains tougher, more adaptable. They're turning more and more to tech like AI and blockchain to get better visibility and agility in their operations. It helps them react faster to tariff changes or new regulations.
So it's a complicated picture, rising tariffs, economic worries, but also adaptation and tech solutions emerging. Okay, let's shift gears now. Let's talk about the second big topic, sustainable trade and ESG. This feels like a very different angle.
It is, in many ways. While the tariff discussion is largely about economics and geopolitics, this rise of sustainable trade and ESG principles, what reflects a growing focus on ethics and environmental responsibility in how we trade globally.
Right. For listeners maybe less familiar, can you just give us a quick rundown? What does ESG actually stand for?
Sure. ESG is environmental, social, and governance. They're basically three buckets of criteria used to look at how a company operates. What's its environmental footprint? How does it treat people, society? And how is it run internally? Its management, its ethics. The core idea is aligning trade not just with profit, but with bigger global sustainability goals.
And why is this blowing up now in 2025? What's driving this big focus on sustainable trade and ESG?
It's really several things coming together.
Yeah.
You get a huge increase in consumer demand, especially from millennials and Gen Z, for stuff that's made ethically and sustainably. At the same time, governments are bringing in tougher rules. And there's just this growing urgent awareness about climate change, biodiversity loss, social inequality. All these big issues are pushing sustainability up the agenda for trade.
Okay, so what are some of the key things happening in the ESG world in 2025? What's changing on the ground regulation-wise or practically?
Well, on the regulatory front, the EU is really out front. They have this thing called the Corporate Sustainability Reporting Directive, or CSRD. It's now forcing almost 50,000 companies to report detailed sustainability data, everything from emissions to labor practices. And then there's another one, the Corporate Sustainability Due Diligence Directive, CSDDD. That goes even further. It makes companies proactively find, prevent, or fix negative human rights or environmental impacts right through their value chains.
Yeah.
It's not just about reporting anymore.
Wow, those sound like they have real teeth. Significant rules. And you mentioned consumers changing their habits.
Definitely. Millennials and Gen Z, they have serious spending power now, and they're clearly choosing sustainable products. They want brands that are transparent about where things come from, how they're made. Actually, EU consumers show a particularly strong preference for sustainable goods, and that's really starting to shape global trade as companies try to meet that demand.
So if companies don't focus on sustainability, they risk losing a big chunk of their customers.
It's looking more and more like that, yeah. We're also seeing some fascinating tech integration happening with ESG. Things like AI, blockchain, big data analytics, they're kind of revolutionizing how companies track and report sustainability. They're making data more accurate, more transparent, even helping predict risks.
Can you give an example? How does that work in practice?
Sure. Blockchain, for instance, can create these unchangeable records. So consumers or other businesses can trace raw materials right back through the supply chain, verifying ethical sourcing. And AI can crunch huge amounts of data to assess a company's overall sustainability performance, spot areas for improvement, maybe reduce bias in reporting.
Huh. Interesting. So moving beyond just saying you're green to actually proving it with data, you also mentioned biodiversity and carbon markets.
Yeah, biodiversity protection is getting a lot more attention, especially after the big QP16 conference in 2024. We're seeing new financial tools pop up, like blue bonds for ocean projects or biodiversity credits trying to put a value on saving ecosystems. At the same time, those voluntary carbon markets are under much more scrutiny. People want to make sure the carbon credits being traded actually represent real emission reductions.
It sounds like finance is really getting on board with sustainability, too.
Absolutely. Sustainable investment funds hit, what was it, $2.5 trillion in assets back in 2023? And green bonds are being used more and more to fund eco-friendly trade projects. Look at Luxembourg ESG funds, make up something like 67.3% of their main investment fund assets, their UCITS funds. That's a huge chunk, showing real commitment in a major financial hub.
So right across the board, rules, consumers, tech, finance, there's real momentum behind sustainable trade and ESG. What are the absolute core drivers pushing this so hard?
Well, fundamentally, it's the climate crisis. This triple crisis, climate change, biodiversity loss, pollution, it just makes sustainable trade essential, not just nice to have. It forces governments to line up trade policies with environmental goals.
That really underscores the urgency. What else is pushing it?
Well, as we touched on, those regulatory mandates are huge. Stricter ESG reporting rules in places like the EU, UK, Canada, they're really compelling companies to build sustainability into how they operate. Then you have investor pressure. Big players like pension funds, asset managers, they increasingly favor companies with good ESG scores. They see it as managing long-term risk and finding sustainable growth.
So it's not just about doing good. It's seen as good business by investors, too.
Exactly. That's a powerful motivator. And of course, consumer awareness is key. As younger generations demand transparency and ethical practices, businesses have to prioritize sustainability to keep customers loyal. And finally, even those geopolitical shifts and supply chain changes we talked about with tariffs, they can also encourage sustainability as companies try to rely less on regions maybe seen as high risk environmentally or socially.
Okay, so what are the actual effects of all this focus on sustainable trade and ESG? How's it changing global commerce on a practical level?
We're definitely seeing a big transformation in supply chains. Companies are increasingly using nearshoring, reshoring, really focusing on sustainable sourcing to meet rules like the EU's CSDDD, but also to avoid, greenwashing scandals like that Volkswagen emissions thing. That was a huge wake-up call about the risks of pretending to be green.
Yeah, that really hammered home the potential damage, didn't it? Reputationally and financially.
It really did. We're also seeing that companies with a genuinely strong ESG performance just do better. They attract more investors, more customers. It gives them a real competitive edge. Whereas companies with poor ESG records or caught greenwashing, they risk investor backlash and regulatory fines.
So sustainability is becoming a real competitive differentiator.
Totally. And we're seeing sustainability baked into trade policy itself more often. Modern trade deals, like the ones the EU negotiates, often have specific chapters on trade and sustainable development TSD chapters, trying to promote environmental and labor standards alongside free trade.
That's a big shift in how trade deals are thought about. What about the cost? Does being sustainable just mean higher expenses for businesses?
Well, there might be some upfront costs, yeah, to change practices or invest in new tech. But the long-term view suggests it can actually make companies more resilient. It reduces their exposure to fines, to reputational hits, even to resource shortages down the line. And we're also seeing digitalization help cut the environmental footprint of trade itself, like platforms like TradeStream drastically reducing paper use in trade finance.
Every little bit helps, I guess.
Yeah.
So, what's the outlook then for sustainable trade and ESG in 2025 and beyond? Is this trend just going to keep growing?
Absolutely. The momentum looks really strong. The EU's leadership, especially in sustainable finance, holding, 84% of global sustainable fund assets, that sets a high bar. Now, there's still challenges, for sure, like different regions having different rules. The U.S., EU, UK aren't perfectly aligned. And we still need better, standardized ways to measure ESG performance. But the overall direction seems pretty clear.
So, we can expect more convergence on standards and rules eventually.
That's the hope, and likely the trend. We also think AI and blockchain will play a bigger role in making ESG reporting more transparent and reliable. And we'll probably see more of those biodiversity-focused financial products. Bottom line, it really looks like companies that jump on the ESG train proactively are the ones likely to succeed long term.
Okay, so we've done a deep dive into both global trade and tariffs and sustainable trade and ESG. They feel like two really distinct but crucial things happening in trade right now. But how do they actually connect? Are they totally separate tracks or do they influence each other?
That's a really important question. Because while they might seem separate, one focused on economics and geopolitics, the other on ethics and environment, they're actually pretty interconnected.
Really? How so? Can you give us some examples of those connections?
Yeah, sure. Think about tariffs and sustainability together. On one hand, protectionist tariffs can mess up existing global supply chains that might have actually built in some good sustainable practices across borders. But on the other hand, tariffs might push companies to produce more locally. And if that local production is done with the environment in mind, it could mean lower transport emissions, right? And then, strong sustainable trade policies can help make sure that any reshoring driven by tariffs is actually done cleanly, mitigating some environmental downsides.
Ah, okay. So tariffs might bring production home, but you need sustainability rules to make sure it's actually better environmentally.
Exactly. There's also regulatory overlap. Both areas are getting more complex legally. Tariffs are tangled up in trade deals and national laws. ESG is driven by all these new sustainability directives and reporting rules. Figuring out how to make these different sets of rules work together better could really help make global trade smoother and more predictable.
Sounds tricky, but worthwhile. And you mentioned tech being a bridge between them.
Yes, definitely. Tools like AI, blockchain, data analytics, and they're becoming vital for managing both things. They help navigate the supply chain risks and complexities from tariffs, and they help ensure companies are meeting those tougher ESG standards. They provide the needed transparency and tracking for both.
It's like technology is becoming the essential plumbing for managing this whole new landscape, whether you're worried about tariffs or sustainability. So, stepping back, what are the bigger implications of all this for the future of global trade overall?
Well, one big one is potentially greater economic resilience. If countries can find the right balance, maybe some smart protectionism, using tariffs carefully, combined with a real commitment to sustainability, they might be better able to handle shocks, whether they're economic, geopolitical, or environmental.
So, strengthening economies from different angles at once. What about developing nations? We talked about them being vulnerable.
Right. Well, sustainable trade could actually help create more inclusive growth, especially for developing countries. If trade aligns with social and environmental goals, it can open doors for more equitable development, letting these nations join global value chains in a way that's better for them and the planet long term.
That's a really key point, making sure trade benefits are spread more fairly and responsibly. And what about us as consumers? What's our role in this?
Consumer power is becoming huge. As more and more of us demand ethical, sustainable stuff, businesses just have to build ESG into their trade plans to keep market share and protect their brands. Our choices really do send a signal.
It's good to remember the influence we can have. Lastly, what about organizations like the WTO? What's their role in navigating all this complexity?
Oh, a rules-based multilateral system, the kind promoted by the WTO or the OECD, it's absolutely crucial right now. It's essential for managing these trade tensions, for creating a more predictable and sustainable global trade environment. These bodies provide the space for dialogue, negotiation, setting shared rules.
So even with all these shifts, a strong global framework is still vital. Well, this has been a fascinating deep dive. We've really covered the two dominant international trading topics for 2025: global trade and tariffs, and sustainable trade and ESG.
Indeed. We've seen how tariffs reflect this more protectionist, geopolitically tense world with real impacts on trade flows and how supply chains are set up.
And on the flip side, how this growing focus on sustainable trade and ESG marks a real shift towards more ethical and environmental thinking in global business, pushed by rules, consumers, and tech.
Exactly. And together, these two trends really throw into sharp relief the dual challenge facing everyone, businesses, governments. How do you stay economically competitive in this changing world while also meeting these urgent ethical and environmental responsibilities?
Yeah, it really feels like that tension, that interplay between tariff pressures and the sustainability imperative, that's going to define global commerce going forward.
I think so too. And the businesses that get ahead of the curve here, building resilient, transparent supply chains, using digital tools smartly, really embedding ESG principles, they're probably the ones best set up for success in this complex future.
So, for you listening right now, maybe something to think about is this. How might your own choices as an individual, maybe in your workplace, how might they both influence and be influenced by these huge shifts happening in global trade? Definitely food for thought. Thanks for joining us for this deep dive.